Let's get over to Evan Lucas from IG in Melbourne now for his perspective on the market today. Evan, we saw investors buying back into equities overnight, I guess on the assumption that things were a little calmer in Eastern Europe and that poll in Crimea went through without any kind of violence attached.
Yeah, it certainly did, Kate. And I think the way you also look at it is what happened to the dollar ruble as well. So if you look at the Russian side of the equation, which has probably seen the most amount of the effects from the whole Crimea escalation, it actually stabilised quite a lot. We saw the ruble appreciating quite an amount, up around about 1.1%. And I think the way that you now look at that is also what happened in the DAX and also in the CAC last night. They all saw relief rallies, despite the fact that we saw some very, very weak sanctions. And I think what you look at from that perspective is that economic sanctions look very, very unlikely, considering the rhetoric that we're currently seeing. It's more likely to come in defence and also diplomacy issues. So that was a very interesting development out of last night, and that's what we saw from the markets as well. You can see risk assets particularly seeing a nice little pop-up. So the euro had a fairly good night, the Aussie dollar had a fairly good night, and it remains a fairly Teflon sort of base currency considering all the risk aversion out there. Also saw a bit of a breakdown in gold as well, so that was also an interesting situation. Saw a bit of a bearish reversal there, and all that points to a little bit more of the rally that we saw in the US last night could actually start to really flow through during the rest of the week. And I think that was the most interesting developments from it. Markets are the best way to gauge how geopolitical issues happen, and the market response last night to what happened in Crimea was already priced in, and the fact that the sanctions were so probably light-handed is the way I'd probably use the word, showed that the markets now believe that risk is probably backed on, and that, you know, Russia and this whole idea will continue on the way it has. You can see that in history before. The Russian-Georgian war in 2008, Germany and France both abstained, and I think that's a way that you can also see this developing, is that it will happen. I think there will be a lot of political talk, but there won't be actually much economic repercussions for that, and that's why the markets moved the way they did.
Evan, yesterday we were talking about a huge amount of money being repatriated from Russia out of the United States. Was that in anticipation of exactly what we saw overnight, which was some financial slaps on the risks for certain individuals in Russia? Were some of the wealthier investors in Russia fearing exactly that?
Yeah, it certainly was. And the other sort of major player in that move that we saw, Kate, was likely to be the Russian central bank. So they are the ones that probably moved a lot of those assets over the week. Again, it's a suggestion, and it's certainly a very, very positive, easy correlation to make, considering the amount of money moved, and it was around about $105 billion over the week. Now, that is a huge amount of money to be moving. It's not going to make the Fed very happy either, but it did move, you know, out of the bond market to a lot of European safe haven places. So that is certainly the inferred meaning that it was either the Russian central bank. It will certainly be fairly high up officials in the Russian government that were basically safeguarding themselves from the expected financial sort of sanctions that were coming. So interesting that it wasn't actually developed in that way last night. Again, you know, President Obama said that this is the initial reaction. Same from Europe as well. But it just looks like they are unwilling to really go at the Russian government in any sort of economic ties. And that's why the ruble movement last night was quite interesting. The fact that it did move up 1.1% suggests that the economic sanctions that we possibly could have seen may not eventuate. And that would mean that Russia is basically going to see their movement on Crimea as almost justification of what's going on.
Yeah, it certainly doesn't seem like much of a punishment, and they were pretty low grade, those sanctions. Yeah. But as you mentioned, we're still seeing Europe and the United States say, unless you back down, more sanctions are going to be levied against you. At this stage, it sounds like you don't think that's going to be anything too harsh, but it sounds like it'll at least be a step up perhaps from what we're seeing right now, which is just punishments on individuals.
Yeah, and I think also the way you look at it is that it will be pockets of the markets that you can watch. So one to watch particularly will be, they are talking about defence contract and defence freezes. So that would be the one to watch, quite interesting. Airbus Group, which actually had their major subsidiary, which is EADS, which is the European Aeronautical and Defence Service. That is the part that actually provides military missiles, communications, aircraft, etc. to the Russian Federation as part of what they do. They may actually see an impact if they do put freezers on there. You can also probably put Lockheed Martin in there. They have some sort of relations on communication side, very small, and that might be a place to watch. Other side is energy. Now, Russia obviously provides a third of Germany's energy, provides roughly around 23% of France's energy, also around about the same amount for Italy, and that may be another place to watch. Is if Russia uses that as a bargaining chip, you may see the likes of Shell, Total in France. Also, you could put BP in there, seeing a bit of an increase because their demand for energy from that side could actually increase. But they're the only places you can see movements, and as I said, at the moment the inaction on the monetary side is a little interesting, considering how much rhetoric, particularly from the US, there was around that change. So yeah, it is a little bit disappointing that the sanctions are more diplomatic. I think is the correct word to use there, rather than economic, and I think that will be the structure for how this negotiations go forward. Also remembering that Russia has now actually themselves come to the table on negotiations. They want Ukraine to have basically military neutrality. They want to have Russian as a second recognised language, and they want more independence for the region from a federal level. So that is their negotiation that they're now taking, and that's a very interesting step, that basically they want Ukraine to be completely neutral in terms of their movements into EU. So that came this morning. That was an interesting development, and that I think will also play out over the week as well. Yeah, because that takes it a step beyond Crimea, of course. You mentioned energy there, and we know that Russia supplies about 40% of Europe's energy. I guess this plays into the shale story in the United States as well, and just how much of a game changer that could be in the future. Yeah, again, I think the issue with it is that this is a here and now story, whereas the shale gas is probably a 3 to 5 year story away. Again, the other thing that you can see happening in Europe from not just this sort of tension, but also from the Russian-Georgian tension, is that Europe is trying very, very hard and very, very quickly to move away from its dependence on Russian gas particularly. So yes, it certainly would mean that, you know, the the shale story would certainly ramp up. US could actually see, you know, eastern ports now actually developing gas outputs to actually service into Europe, because Europe may start looking at the US as a way of getting their gas reserves up with the Russian tensions going that way, and that is certainly a development to happen. But unfortunately, this is a here and now story, and you can see the fact that Germany particularly, and also France, are being very, very light-handed in their negotiations and their talks around this, means that they are still under economic impairment to actually really force changes on Russia's hands, and that's why you can see this is going to be a very, very diplomatic solution rather than any sort of economic change. Evan, let's switch lanes now, and the Reserve Bank out with its minutes today. What insights can we realistically expect to glean from this? We just seem to be seeing reprints of statements of late. This whole stability outlook from the Reserve Bank seems to be their central focus. Can we expect to hear more of that kind of rhetoric today? Yeah, I think we can, and I think that's the most interesting thing. And last night, I think one of the most respected sort of economists in the country, Bill Evans, actually changed his talk from 2 rate cuts to actually no rate cuts and a possible rate hike midway through 2015. Now, that is a very interesting change. He was a real champion of rate cuts over the last 3 years. So his movements has certainly made a real eye-opener to the market. A lot of people were expecting that stability. I think what we want to see from the minutes is where they see the stability and the green shoot sort of material coming from. GDP print headline looked okay, but if you drilled it into it, it was still soft. You know, forward-looking conditions, consumer sentiment and business confidence over the last 2 weeks have been a lot weaker than expected, yet we then had an unbelievable employment print as well. So there's very mixed data out of there. It may give us a bit more colour to where the RBA sees the whole outlook of the economy. Housing, we know, is one area they're concerned about. Again, the Aussie dollar remains really quite elevated to their historical levels, and it'll be interesting to see how they talk about that and how they're going to moderate that issue with a housing market that's ramping up and a non-mining sector that isn't performing. So very interesting in terms of the colour perspective, but again, that whole idea of rate stability is the biggest concern for the Aussie dollar, and the fact that it remains quite elevated. So want to see why they see that and how they're going to approach that in the next 12 months particularly. And Evan, just finally, some opening calls for the market today. We're looking at some positivity at the open. So Evan, is there anything else that's likely to counter that? We've got the Fed meeting in the States, but it doesn't seem like that's going to be particularly headline driven at all. No, and I also think that the copper price sort of slightly stabilised in Shanghai last night. That will also be good for our market today. We also saw from a technical level that we held at 53.10, 53.15 at the close yesterday, so we were above that. That was a nice little positive thing to see, so we should pop up this morning, following on from the US, following on from Europe as well. The China issue seems to be dying down from the sort of the headline media news, so that is also positive. We are due a bit of a pop, considering we have had around about a 4.5% change over the last 2 weeks. So we're expecting to see a bit of a pop, and therefore we are expecting to move to around about 53.25, maybe as much as 53.35. Watching that this morning should be a relatively good positive start to the day today.
Evan Lucas, thanks for your time today. Really appreciate that.
Thanks, Kate.
Evan Lucas from IG Live in Melbourne there.